Ladies and gentlemen, today was one of those days in crypto that makes you stop and rethink everything. What just happened in this market is not random. It's not just volatility. It's not just normal price action. We may have just received confirmation of something we've been discussing for months, that there has been a much bigger force operating behind the curtain. Before we dive in, if you're watching this on Reverse Crypto, make sure you hit that like button and subscribe. It helps the channel grow, and it keeps you ahead of what's really happening in these markets. Now let's talk about what unfolded. The total crypto market cap surged nearly 12% in a single day. That's over $240 billion added back into the space almost overnight. Moves like that don't just happen because retail traders suddenly feel optimistic. There's usually a trigger. There's usually a shift behind the scenes. Technically speaking, we still haven't fully broken out on the daily time frame. Price did hit resistance and we're still trading inside a wedge formation. But something important happened. We printed a higher low. That changes the structure. That suggests strength is quietly rebuilding. Then there's the RSI. If you look at the recent wick into oversold territory, it reached levels we haven't seen since the COVID crash. On the weekly time frame, the momentum indicator dipped to its lowest point since the 2022 bear market bottom, the same period that followed the collapse of major players like FTX. That kind of extreme reading often signals exhaustion on the downside. Could we see one more sharp dip? Possibly. Markets love to fake people out. But right now, conditions resemble a potential bottom forming, especially if the biggest source of pressure has just been neutralized. So how did the major assets react? XRP jumped almost 13%, gaining roughly 17 cents on the day. That's a meaningful bounce. XRP had already been trending downward prior to this move, but the recovery preserved a higher low structure dating back to early February. The challenge now sits around the $1.48 region, which is acting as resistance. To confirm strength, XRP needs a decisive daily close above roughly $1.51. Even beyond that, there's another supply zone between about $1.58 and $1.65. Ideally, we'd want to see price clear that upper wick area and close strong above $1.60 to $1.70. If that happens, reclaiming $2 becomes a realistic scenario again, and that would significantly shift sentiment for holders. Bitcoin also delivered a massive candle, nearly 12% up, adding more than $7,000 in a single day. That's the kind of move that signals aggressive repositioning. But here's the key. This shift appears tied to one specific name, Jane Street. The firm is now facing legal action over allegations connected to insider activity during the Terraform collapse. For those newer to crypto, Terraform, and specifically the Terra Luna ecosystem, imploded in 2022, triggering one of the most devastating chain reactions in crypto history. Many believe that collapse accelerated broader market destruction, including the downfall of FTX. Jane Street is not a small player. They handle more than 10% of equity trading volume in North America. Their trading revenue reportedly exceeds that of the largest hedge funds globally. Because they operate as a quantitative trading firm rather than a traditional hedge fund, they're not required to disclose detailed strategy information publicly. According to the allegations, the strategy was straightforward. The firm leveraged relationships with insiders to gain access to non-public information. With that advantage, they reportedly unloaded massive amounts of UST at precisely the right moment. On May 7, 2022, Terraform removed 150 million UST from a major liquidity pool in preparation for a new pool launch. Less than 10 minutes later, Jane Street executed an $85 million sell order in that same pool, the largest single transaction there. That sale triggered a cascading sell-off. Within hours, UST lost its dollar peg. The Terra ecosystem entered a death spiral. By May 9th, UST was trading below 80 cents. Days later, it collapsed below 15 cents. Luna followed, effectively going to zero. What makes this even more striking is that communications reportedly existed between Jane Street representatives and Terraform leadership during the crisis, including discussions about potentially buying assets at steep discounts while the system was unraveling. If these allegations hold weight, this wasn't random failure. It was strategic positioning at the expense of an entire ecosystem. And here's where things get interesting for today's market. Since legal pressure mounted, something changed. The familiar daily 10 a.m. sell-offs in Bitcoin, the pattern many traders noticed since October, suddenly stopped. Bitcoin has rallied sharply since the lawsuit surfaced. The weekly candle flipped green after multiple red weeks. Over $200 billion flowed back into the broader market cap. Coincidence? Maybe. But timing matters. If a major algorithmic desk was forced to halt certain strategies, that would remove persistent downward pressure. When that pressure disappears, markets breathe. Retail investors often feel like the game is stacked against them. History supports that concern. From the 2008 financial crisis to repeated regulatory fines against major institutions for market manipulation. When you understand that, price action looks different. You stop reacting emotionally to every shakeout. If large players were leaning heavily short and that activity slows or halts, the possibility of a squeeze increases. We've seen this dynamic before in markets like GameStop, AMC, even commodities like silver when retail coordinated pressure against institutional short positions. The key takeaway isn't revenge. It's awareness. When manipulation becomes visible, its power weakens. When patterns break, narratives shift. And right now, the crypto market just experienced one of the most dramatic narrative shifts we've seen in years. Let's zoom out and connect the bigger picture. Back in 2022, when Terra collapsed, most of the blame was directed at its founder and at the design of algorithmic stablecoins. And to be fair, structural weaknesses were present. But if the newly revealed information is accurate, the implosion wasn't purely organic market forces. It may have been accelerated, or even engineered, by strategic institutional action. Terraform had announced adjustments in April of 2022. One was a move to reduce unsustainably high yield rates. Another involved integrating UST into a new liquidity pool structure designed to improve stablecoin efficiency. Curve's 3 pool was the dominant liquidity hub at the time, containing UST, USDC, USDT, and DAI. A new 4 pool was expected to launch with slightly different stablecoin composition. When Terraform withdrew liquidity to prepare for this transition, the system became temporarily more fragile. That's when the massive sell transaction hit. Liquidity gaps amplify volatility. A large order in thin liquidity can cause cascading effects. That's exactly what happened. Within days, billions in value evaporated. Panic spread across crypto. Confidence shattered. Forced liquidations accelerated. And months later, FTX collapsed in what many consider the final blow of that bear cycle. Fast forward to now. Legal scrutiny has emerged. Reports indicate internal communications channels were established years prior between individuals inside Terraform and representatives connected to the trading firm. A former intern allegedly helped facilitate information flow. If true, that suggests access to strategic insights before the broader market understood the vulnerability. Now imagine being in crypto during that period, watching portfolios collapse, believing it was simply market risk, and then learning years later that large institutions may have profited from inside positioning. That realization changes psychology, and psychology drives markets. Over the past 2 days, Bitcoin gained roughly 10%. Market cap expanded by more than $120 billion in Bitcoin alone. The repetitive sell pattern around U.S. market hours paused. Weekly structure shifted. Retail participants notice patterns. Institutions rely on participants not noticing patterns. When information surfaces and confidence in manipulation weakens, behavior changes. Does this mean manipulation is gone? Of course not. Markets are competitive arenas where information asymmetry always exists. Large firms have advantages in speed, liquidity access, and capital scale. But exposure alters the dynamic. If a major desk was running significant futures pair trades or algorithmic short strategies and suddenly receives internal instruction to halt activity, that can trigger imbalance. If those positions remain open while upward pressure builds, a squeeze scenario becomes possible. We've seen this across asset classes. When retail traders identify heavy short exposure and collectively position against it, volatility explodes upward. Again, this isn't about revenge. It's about understanding how liquidity flows shift when pressure is removed. The broader implication is that crypto may finally be entering a phase where some of the darkest clouds from 2022 are lifting. Not because institutions disappeared, but because transparency is increasing. and transparency empowers smaller participants. If you recognize recurring sell-offs at the same hour daily, you stop panicking when they occur. If you identify oversold extremes on weekly charts coinciding with legal events affecting major desks, you evaluate differently. Markets are emotional machines powered by liquidity. When fear dominates, whales accumulate. When clarity returns, structure rebuilds. Right now, XRP is defending higher lows. Bitcoin is printing powerful daily candles. The total crypto market cap reclaimed hundreds of billions in value. Is this the start of a sustained reversal? Too early to confirm. Resistance levels remain overhead. Technical barriers still need to break, but something undeniably shifted. And if the removal of one major manipulative force can unlock this type of movement, imagine what happens when multiple pressure points ease simultaneously. For years, many felt like crypto was fighting not just volatility, but invisible hands. Now some of those hands may finally be visible. And when visibility increases, so does opportunity.